Yeah. We're starting now. Okay, morning everybody. All right, stocks in the US recovered some of the previous day's losses after seeing more than a 2.5% drop in 2 days. They're actually trading reasonably well for most of the day. Came off, sort of right at the end, dropped a couple of points, but so far holding all right today. I wouldn't be surprised to see a little bit of a bounce after this the big drop that we've had over the last few weeks. Housing data has been much worse in recent days, with pending home sales the latest figure to miss expectations yesterday. Asian stocks are seeing a relief bounce for the first time in 3 days this morning, but markets they remain cautious due to the Syrian situation. And then oil retreated from a 2-year high after US crude oil stockpiles rose. Data showed yesterday. And then corporate action. Murray's came out after the bell last night. Headline earnings per share in line, which was the guidance initially beat, but they came in right on in line with guidance. Revenue slightly better than expected. No divvy was expected, and the order book was slightly better than expected. Woolies came out this morning. Headline earnings per share right in line. I think that the divvy beat by 2 cents, a small beat on the divvy, and a beat on the revenue. So it looks, first look, Woolies earnings seem pretty solid. On the outlook, they quoted, we believe that economic conditions in South Africa will remain constrained, especially in the lower and middle income segments of the market, where consumer debt levels remain under pressure. And obviously, they're implying that retailers that target middle income segments of the market would be more under pressure than they are. They're more in the upper income market, so they should be all right there. The other thing I just wanted to mention was Jacques brought out a call yesterday, long Woolies, short SPAR. So if you want to take on some Woolies here and you don't want the market risk, that could be a good one to look at. And then Impala's came out, headline earnings per share 330. The guidance they came out was with 326. The initial guidance was a bit of a miss on the original estimates, but I don't know if you remember how they traded when that guidance came out. That there was initial sharp sell-off, and then it bounced, I think, ending around 7% up on the day. So it was a real reversal on that. So today we're going to watch closely how it trades. Slight beats on that guidance. Revenue came in slightly light. Dividends per share came in slightly better. So it's a small divvy, but a beat nonetheless. And then this morning, SA Chamber of Mines commented this morning that gold unions have until today to accept that pay offer. So it's probably very unlikely that they will. So we might see some more striking out of those mines. And then key factors today: Japan large retailers sales came in a little bit worse. French business confidence, Spanish second quarter GDP. We got German unemployment change, Italian consumer and business confidence, German CPI, and then the big one, obviously, initial jobless claims out of the States at 230, and second quarter GDP annualized growth. Okay, let's have a look at a few charts. First one shows the Aussie. We had a real reversal out of the Aussie yesterday, closing below that 38,000 level. Up a little bit this morning. I think we opened at 38,045, up 190 points. So looking reasonably solid on the open. If we look at the different levels, I guess there's a small level, pretty much where we stopped yesterday at 37,800, and which coincides with the 20-day moving average. If we see a little bit of a bounce out of the States, there is a possibility of a small rally. I would expect more downside after that, though. So I would say levels to watch out on the upside, probably 38,500 or 38,550, around that target. Then on the downside, if it breaks below the close yesterday, I would expect there might be a small level at between 37,350 and 37,500. and then I would say a bigger level around this 36,600 level. So we're going to watch those levels. I do think that we've shown a bit of weakness. We're going to continue with weakness in the next weeks coming up. You can see that we've broken down the immediate term trend line, which is obviously bearish. Next one that I want to show was Billies. Billies, after gapping up from this 290 level, have been forming a bit of a flag, which most cases is pretty bullish to gap up and flag for another move to the upside. It also coincided exactly with this resistance where it stopped on its first run. If we get a close above 304, I would say that's quite bullish to the upside. Obviously, the market has got to play ball as well. On the downside, we're looking for a break below 301 to possibly fill the gap to 290. So watch those levels closely on Billies. These are generally pretty high probability setups, whichever way it breaks. Then let's have a look at Sanlam. I believe Sanlam came out with the results which were slightly negative for Sanlam. They've broken below their previous resistance around 45.80, which could possibly show a target to the downside of more or less 3 rand. So let's say possibly around the 42, 43 level. It's not a perfect setup, so I don't know if I'll trade it myself, but it's something to watch if you are involved in Sanlam. It has also broken down below its 200-day moving average, which is quite interesting. Then Steinhoff. Yesterday, Steinhoff. This is the result of Steinhoff. Steinhoff gapped up sharply on results yesterday. Must have been better than expected. Just to go to an intraday chart just to see how it traded. You can see how it gapped up initially. Consolidated for about half an hour, and this was a really high probability entry. I was watching it closely yesterday. The bids wouldn't back away, even though there was quite a few offers at this 28.70 level, and once it got through there, it really gapped up hard. Since then, yesterday afternoon, it sort of trended downwards. It's also forming a bit of a flag. If we go to a 30-minute here, I would say we want to look to buy this one. If we get a move above this this flag, if we get a nice positive candle through that sort of 28.80 level, then I would say that it could be a good buying opportunity to go back and retest 30 rand. All right, Discovery had a massive down day yesterday. Was that time result? Yeah. So it came out with the trading statement. It was obviously I didn't actually see it myself, but it was obviously a lot worse than expected. I think it was down around 9%. You can see, obviously it's probably a stock that we want to be buying in the longer term when this correction is over. So I'm not sure if I'd pile in just yet, but the longer term trend line comes in at around 81 rand. We're currently sitting at 86. So if we get a little more downside, it could definitely be worth a buy. I think it's even worth a buy at current levels if we get sort of a couple of positive trading days out of it. But I wouldn't be piling in just yet until we see how this bottom takes shape. And then so look at Woolies. Obviously we just saw the Woolies results. We're going to obviously watch the trade action before we get involved. See what the market thinks of those results. But it's sort of sitting on, it pretty much gapped down to support around 58.80, 59 yesterday, and bounced and closed reasonably strongly. It was actually one of the strongest performing stocks yesterday, despite closing small negative. But there could definitely be a bounce in the stock if they like those results. Otherwise, if they close below the low of yesterday, it's probably one that you really want to exit and wait to see how far it can go down. And then I just wanted to have a quick look at the golds. On Tuesday morning, I was saying about giving levels in Goldfields and Anglo Golds, which was about 10% below the current price, saying those are the levels you sort of wanted to look at and to start nibbling. And it's already Thursday, and looking at where those stocks closed in the States, we're right at those levels already. So it's quite surprising that we moved down that quickly. And it's quite surprising that the gold price hasn't moved. So it's either going to be a case of the gold stocks leading the gold price down, which we'll watch the spot gold price really closely here. We had a negative day, or we had our first sort of negative candle there last night. I guess if we break this trend line, we could be, or which coincides with about 1400, then we could see a quick move down to 1350, 1360. If we have a quick look at the actual stocks, I was looking at the around about this 20-day moving average at 135, 136 for Anglo Gold a couple of days ago when it was trading at 155, thinking it was miles and miles away. But if I look now at where they closed in the US, the rand adjusted price is 137. So all things being equal, if we had a good reversal off this level, I would say it's a good buying opportunity. Obviously, we've got action in Syria, and we've also got global markets that are volatile at the moment. So, whenever you're trading a commodity share, you can expect, especially these gold shares, you can expect some major volatility. So I would act with caution, but I would say they're starting to get to attractive buying levels. And if we want to have a quick look at Goldfields as well. Goldfields, I think we drew this trend line at 53 rand, between 52 and 53 rand. It's sitting at 53.59, the rand adjusted price in the States at the moment. So definitely, I would say getting to buying levels if we see a little bit of strength with these levels. That's all for today, guys. Good luck today.